and this is the weekly market wrap-up. I hope you all enjoyed your 4-day week. I know I certainly enjoyed my long weekend in Maui. I could get into detail, but I'm pretty sure this is a little bit more important. Right into the equity sector, which was left in confusion after comments from Federal Reserve Chairman Ben Bernanke. The chairman indicated that bond buyback programs or quantitative easing may be reduced as economic metrics improve, but no promises were made. Volatility exploded throughout the global markets this week, particularly in Japan, as its benchmark equities index lost over 7% of valuation in a single day. For the U.S. markets, the Dow Jones gave up only 12 points, but the S&P lost nearly 1/3% from the prior trade. Now, considering the extent of damage that was felt in overseas trading, many investors stateside were expecting a full-blown crisis, but luckily major indices only saw a minor downside. This caused major financial pundits to be optimistic, like CNBC's Jim Cramer.
But in truth, we know that the United States is the country with the strongest stock market on earth, and that's why we could recover when all other nations fail.
It is really impressive that our domestic sector held stable. However, we shouldn't get too far ahead, as there is still some cause for concern. Often ignored in financial discussions is the relationship between the equities market and the 10-year U.S. Treasury yields. When comparing peak to trough, 10-year yields have declined by 62% in just the last 3 years. Coincidentally, the S&P 500 index has risen up 62%, thus causing us to ask the question, is a major reversal in play? While it's just too premature to call a bear market in equities, we urge extreme vigilance under these macroeconomic conditions. Winners and losers. Hewlett-Packard takes the trophy by gapping up to nearly $25 per share yesterday, which gives the computer electronics giant an 18% lift for the week alone. This single-day move was critical as it broke through its 50-day moving average, which was acting as a resistance barrier for almost a month. Also, yesterday's close jumps the price by 3% above its prior peak in late March of this year, thus breaking another technical barrier. On the loser side is InspireMD Inc, who provides medical equipment and appliances to the healthcare industry that has been experiencing significant volatility. InspireMD took a huge drop, almost 15% yesterday on high volume, with some investors getting scared off by poor revenue numbers despite an influx of capital over the past few years. Still, many fund managers have issued buy signals on InspireMD, but until the price reaches $3.50, we highly recommend conservative investors to sit this trade out. Lastly, let's take a look at precious metals. Gold was on a roller coaster ride all week. It closed yesterday's session at $13.89. Yellow metal is really on the cusp of a decisive breakout move. On one hand, it's testing further downside, given the weak momentum and volume, not to mention the low price point. A reversal in the equities market can quickly shift sentiment from risk-on to risk-off assets, providing the necessary impetus for a bull run in the metals. Now, I do feel like it's significant to note that out of the 4 major precious metals, Palladium is now the only element that has fully recovered all of its losses from the April 15th commodity sell-off. And with Russians producing less supply in the open market, Palladium could still rise despite volatility in the global stock markets. While some downside was felt yesterday when the other white metal took a 0.5% hit, Palladium has been one of the more stable commodities in these recent years. If you are a hard asset investor, you may want to consider reducing exposure to gold and silver in favor of physical palladium as a means to control downside risk. And that wraps it up. For those of you that are local, I hope to see you at Cambridge House, and for the rest of you, I hope you really enjoy your weekend. Don't forget to email me at info@viralnetworknews.com to let me know what you love and you hate. Okay, I'll shut up. For VNN, I'm Hannah Bernard.